Hello, hello. Good morning. Welcome to another ESP2 stream. This is Victor streaming from Alanda. Today is Thursday, November 9. It is 9 a.m. Eastern Time in the US. Okay. As usual, the first thing I do when I start my day, actually I do this the day before. The goal is to do it as soon as the market closes, but sometimes I am just too tired. I don't do it right away. What I do, I check my monthly, I check the different time frames here. You know, before going over there, this is what I am watching here. This market, you can see what is happening with crude oil. The bond market is kind of far from the lows now. I don't like this gap though. Look at this high here. You know, there's no excess. This is good excess relative to the rally itself, but it has no excess relative to this day, right? It is very mechanical trading that's going on here, and now because at the end of the year, you know, seasonality, I'm checking this market as well. Crude oil, what's happening with crude? Today we have Chairman Powell speaking at 2 p.m. I don't know where I'm going to catch that, but he is speaking today. I didn't know he spoke yesterday as well, 9:15, but there is just a bunch of speakers, a bunch of Fed speakers, you know, in the market. Look at this: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 speakers this week. I had never seen plus 2 times the Chairman Powell. You know, that's 15 times during this week. I don't remember seeing something like this before. You know, when there's something like this going, you know, I don't like this. You know, for what is going, especially in the situation the market is right now. What situation is that? That's where we're going now. We have a range in the crude market, and now the market is breaking, right? It was breaking, and I have noticed this thing in this market. What's going on in the other markets? Time up. I should check this often. Russell. I guess Russell has support here, or resistance in this case. The Dow. Oh boy. Oh, this is not good in the Dow. Now, oh boy, look at it. Look at what the Nasdaq is doing here. This is, oh god. This is not good. This is bad here. It is just super hyper extended to the upside. Something that, look at how similar these two markets look. The S&P and the Dow. This is what if you can see this, you know, whenever I see something like this, you can almost place a trend line here, right? You know, whenever I see something like this, this is just an indication. This could be the last. These are the last stage of this rally here. What's going here? You know, hyper extended rally, most short covering. We have a range here. Another way how this is stay. I won't be surprised if market take this range out, maybe closing the gap I will monitor if it takes this out. This has good also taking this out, going halfway through the gap and then breaking, or maybe taking closing the gap. Nobody knows what's going to happen here, right? Now this is super. I think it's super bad. All the markets are doing the same thing. Russell already is repairing this thing. Now look at this. It is 905. You know, we still have the bigger time frame is always the last one to reflect change. I am very focused on this level here, in this level up here in the mountain. Okay, because that will represent that the trend to the downside, you know, one time frame lower has ended in the bigger time frame. We may have some sideways trading here. This level here, previous month high, is also a reference in the weekly time frame. There's no excess here, up here. This market, I mean this time frame, no, has taken this resistance level. I mean the easy, you know, how easy this level was traded through is what I've noticed, right? In the weekly, look, that's tremendous amount of tremendous range extension here. Now we have one time frame higher in the weekly time frame. This is going lower, this is going higher, and this is going higher as well. And this is the daily. Notice this level here, how weak this level is. Very, very weak here. Now there's a lot of stuff here in this area, and there's no resistance at all. There's a gap here, there's a vacuum here, there's a void here, and the market can just go through this thing. Really, it shouldn't have any problems going on. But when I see this, you know, when you see this thing, and this is just super hyper extended here, the risk here, the risk of being long is very high, just by looking at this chart here. Now, if I check my market profile, it is just more of the same. It just reinforces the same concept here. I mean, the same observations. Look at where this low has been taken. I would love to show something. I don't know if I can show it here. Maybe I can show it. Maybe I can show it here. Let me see. What I'm trying to show here is the following from yesterday. Okay, yesterday and the day before, there was tremendous amount of volume here that was not, you know, that were not these areas here were not were being kept. The market didn't challenge these high volume areas here. This wasn't touched. There was something that came here, but it wasn't accepted. But notice this is Tuesday, okay? Notice how there is no taper here, no taper in this bar here, and no taper down here as well. And the correction happened. It not necessarily happens right away. The correction happened yesterday. Okay, it didn't happen this day. And notice how there were big blocks here as well. There's a lot of volume here. And the market the next day came down to this area and was bought from this level here. Well, there was, and that's why I said before that during this cycle, you know, I guess these technicians, the ones that use supply demand areas, I mean, this is a dream market for them. You could basically trade the market using those principles. But markets are always evolving. The market is not going to be the same all the time. And yesterday, we have this area that wasn't challenging. I mean, it was kind of challenging, but it wasn't taken, wasn't clear. Notice how it dries here. Notice how we have one here at the top, right? One. I was expecting something bigger here, but it didn't give it to us. Yeah, the risk was high on both sides yesterday. That was something I put on Twitter. And But in the second half of the session, it was, you got to be, one had to be, had to have some suicidal tendency to be long in this market. When the market, look at where this mark is. This orange line here. This is Halbach. How many times the market was bought from Halbach? 1, 2, 3. You can put this one as well, maybe 4, and this one too, 5 times, right? And you had volume here. The last thing I want to be here, the last thing I want to be here is long. It doesn't mean I'm going to go short, but notice something here, something very interesting, right? We have a breakout to the upside, right? The breakout this is a very weak breakout. Notice how far the market has retraced it. First here, and on the second, first time was retraced down to here, but the second day comes down all the way, pretty much down to here. But you have volume here, right? If you have any shorts, this remove the shorts, but there's no selling here. There's no selling here. What the market does is reinstate the longs here, or shorts if you want it, up here. Notice how, in this case, you are not seeing one day at a time. You can put these two together. Well, you join these 2 days, because these are balanced areas. The whole day is a balance, the whole day is a balance. And what's happened, while you can see value moving lower here during the day, overall, it's kind of like in the same place. The same thing that happened here is happening. It happened in in the next 2 days. And that's why why trading is, trading is more like an art, right? This is not a science, okay? No, there are no 2 days that repeat. There's always something new in trading. There's always something changing in trading, all right? And going back to yesterday, we got this absolutely crazy level here where the market has been bought from. Notice where the overnight is, right? Notice where the overnight is. Right there. Again, you have a rally here. You can put a trend line here. Oh, speaking of trend lines, before we go over there, I still have something here that is catching my attention. This is the current contract. This is December, and when I see a market trading very mechanically, with good odds has been dominated by short-time traders, this kind of reference, in this case, this is a trend line here, right? This kind of reference may work. Traders may see these things. This is not good, absolutely. The risk in the lower side is very, very high. This is the risk reward is very, very, very high here, or very low, depending if you go short here, for example. What is your risk? The risk you may take. As soon as the market takes this high out, you're out. This is the distance of your risk if you trade it daily. But if it doesn't, right, you have to give some room also to the market. If it doesn't, the potential is all the way down to here, right? Or at least one or maybe 2 gaps. The close of these 2 gaps, right? That's the risk reward here. This is something like what Jim calls this Jim calls these asymmetric opportunities, okay? Because the risk is could be very low in one trade, and the reward is very high. All right, but trading is not easy. It's never that easy. And we need to find location and manage. We need to manage the trade. All right. Okay, let's go back to market profile. The volume. Look at the volume here. We know the risk in the long side is absolutely high, very high risk in the long side. And notice what's happening with volume. The higher the market goes, the lower the volume. Volume is decreasing. Right? That's something you don't want to see. I want to see if I have a directional move, I want to see if I see higher prices in this case, I want to see volume behind. Because that's, at least for my trade, for the way how I see the markets, that's what I use. I use time, volume, and price, all them combined, not just price. Which is what most traders do. Most traders are just momentum traders, which is, yeah, and they just follow price. If you have a chance to check yesterday's come on. Yesterday's webinar, I mean, this is Jim's webinar. These are free, man. He used this to advertise his courses. But if you don't want to do the courses, that's okay. If you can do it, if you can, that would be a really good idea. But if not, the information that he puts here is just amazing, man. You know, and this is by free. You can learn everything that he teaches is here. I was on several of his intensives. I think he's really good. But everything is here, right? And if you understand what coaching and mentoring is, you will see why you cannot just learn, but watching these things, right? But everything is in here. This one yesterday was, very, very useful. Very, you can find a lot of information there about the current market and about the process of learning as well, which is what I'm trying to highlight here. And going back to market profile, I think personally that the long is absolutely crazy, or has absolutely crazy high risk here. I got the situation here. Check this non-excess here, weak level here, non-excess here. This is a poor low, weak level here, gap here, impressive gap here, weak level here, another weak level here coming from the 200, non-excess here, and now these two together, right? These two together are very close, right? And this level here, again, another weak, 8. All of them, 9 of 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. I mean, 9 lows out of 9 are either weak or poor or both. The risk here is crazy high. But that being said, momentum can take the markets to extremes. There is nothing there that will show us or warning us the momentum is over. There's nothing there. We will not hear a bell that rings. There won't be a sign that says, okay, momentum is over. Now it's time to go to the other side. There's nothing like that. Right? And the thing about momentum is, it's just a crazy thing. Sometimes, it just takes markets to extremes. And more often, than not, when we have this kind of weakness, there has to be something, some catalytic that triggers the liquidation, that triggers, the long liquidation, or that will repair all this weak rally. The break here was crazy, was very weak, and this rally, just as Jim said yesterday, this rally is even weaker than this. This was bad, and this one is even worse than that. Okay, but it doesn't mean that it's going to break now. every single time is getting riskier and riskier. Now, something that most traders always usually think is, the market has come all the way up to here, and it's not coming here to break from here. It has to take this level. It has to. That's just a way to think it. That's a way to think, and sometimes it's just a self-fulfilled prophecy. And if you look at this, if these kind of traders are the ones that are dominating the market, and the ones that are in control of the market, mechanical or technical trading, they will be seeing this. Look at where this trend line is. Just take these ones out, and right there. If it takes, but I doubt if this is going to be a selling here. There may be, because if this high is repaired, remember, we don't have nothing there that can offer any resistance. The 100 is kind of really close to that level as well. And this is the current contract. Okay, if we see the daily, this is the adjusted contract. It's kind of how much you have. 44.72 is the 100. 44.60, 10 points lower here. And this is what all the traders will see as well. 44.30. This is one. Can you see which one do you see? It doesn't matter really, but I got these ones. I watch them. I observe the market. What happens with the market? I've noticed, for example, that the last couple of days, the market was bought from the 50. Now this was a very useful reference here. If this level has been used, the traders that are in this market, that are, or the participants of this market are paying special attention to this trend line. No to this one. What they are doing. Okay, it's also an indication who is in this market. So they are good also. Maybe this one is, they're going to pay special attention to this level as well. Okay, the bigger time frame, I think this is, this level is absolutely weak here. Going into the opening now, it is 9:22. What I have here, or what we have, is a gap, another gap, right? We have another gap. No spike, no nothing here. We have a gap. Trade guidelines go with a gap that does not fill right quickly. If you can replay this day, if you can replay yesterday, you will find good insight yesterday. What happened yesterday when the market took this high out, it just couldn't. It just dries. It just dies here. Okay. Watch this bar yesterday. After this was the only opportunity I saw, and this one as well. Why F? Now that you can see it, right? In real time is harder. Now, okay, this is good, but why this and why this? Because again, if you can watch yesterday's webinar, Jim's webinar, you will understand. You have better insight. But what I've seen yesterday is how you will see, you can replay this market. You will see how the market just dives. It tries to go high, it tries over and over to go higher. It just can't. And F here is a spike. The market's trading one way here. Wow, it makes me sleep. It put me to sleep yesterday here. When it comes down here, you got a spike. The market started trading really fast here, and that's change. And spikes, okay, markets re-enters previous trading day range and targets the opposite side. That's the trade. And the spike actually trades really close to the low of the previous day range. What I saw is the market closing the distributions, which is another sign of the weak market. Okay, and this trade, this bar here, this period, okay, changed the tempo change the tempo. And spikes are usually how professional traders, okay, get either trim the position or close the position or hedge the positions. Okay, this was clear yesterday here. It just boom got the spike, took the high volume that we have. Remember what I showed you earlier, the high volume from this day, high volume area that wasn't challenging or was just revisited but didn't have acceptance. Took that one out. There were 3 levels here, or I guess it was this day. Yeah, it was this day. It has 3 levels with high blocks and volume as well. And the third one is taken, and boom, voila, we have a reversal here. And the next thing, if you didn't take this one, the next thing, you have an inside bar. Inside bar, okay? The previous days, this one and this one, we also have inside bars. And the thing what happened with those inside bars is they were, go with the breakout of the inside bar. The traders go with the breakout of the inside bar, preferable in the direction of the trend. Both breakouts were in the direction of the trend, either the intraday or the bigger time frame trend, but there was rejection of the breakout. Okay, one day rejected, the next day rejected as well. And okay, what's going to happen now, right? This day is going to have a rejection as well. So those kind of things we have to be very aware of. We have to remember what happened, since this market, you can see, is dominated by very short time frame traders. You try to get in the mind of those ones, or those ones as well. They will expect failure. It happened twice before. Traders do what works until it doesn't work anymore. They expect failure, and this one didn't fail. And your stop would be maybe 2 ticks below or before this, before G. It was kind of risky as well because value is higher. I took something here, but I got a spike here. There was a spike here on H when H took F, and I closed somewhere down here. I was expecting maybe some selling appearing, okay, because value was lower, and it just didn't happen, right? I guess I closed too short, too soon here. But it is what it is. When you got the market, when you got the right trade, I guess I was lucky, and when you got it wrong, it's all your fault, right? Now, into the market now. Overnight inventory is fairly balanced. Okay, there's no long, no short, or a good amount of trade above, good amount of trade below settle. Settle is the 4400, right there as well. Traders just pay too much attention to these round numbers. Notice where the pullback was before the base of this rally. Look at where the base of this rally is, exactly last here. Notice, carry this information out. This will be something that I'm willing to carry out because this level is absolutely weak here. Okay. Let's do that. This is freaking weak here. I don't want to be long here, and I guess I'm having a bias here, right? But if I go, if I'm going to take any position here, it has to be OCO order. Those ones that the ones that put as soon as you put, automatically put a stop to your order when you are when you put your order, right? You put a stop simultaneously or at the same time you enter the market. Okay, it is 5 minutes. I mean, a couple seconds or less than a minute to the open. Let's see what this market has for us today. What I wanna do. Bad boys, what you gonna do? Alright, alright, alright. I need to close. I need to put my desk in order. 5 seconds to the opening. Well, the market is open. Let's sell. Let's buy. Okay. Okay. There's some selling from the opening, coming from the opening. The market has re-entered previously range. This level is, continuation. We see the market. A continuation. We see the market taking overnight hallback. Overnight hallback here. Value area. This is 4,400 as well. No interest in the market, right? The market opened with the gap and closed the gap right away. These levels just, man. And also, when this day happened, there's unbelievable amount of blocks here. No, they were in the 10,000s here, trades here. When this happened, it was just unbelievable high here all the time. That's why I have these blue lines here. These ones are not here anymore. If these were shorts, these are not here anymore. Gap has been closed. A little bit higher volume. A little bit higher than yesterday. Dum, 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 dum. No? All right. The next thing, 4,400, which is also settled, which is also value area high from yesterday. Yesterday value was lower. We have a 4-day range, trend to the upside. Got your this area here. Pay attention to this area. Okay, this is 4,400 here. There's a lot of ball. I don't like this part, how this thing has been made. I mean, this is just really bad. Notice this is another weak opening here. But man, the way how they come on, brother. I don't want to be long here. They're good also the law, but I mean the risk is. I think the risk is just too high for my taste. Okay, market is being bought from overnight hallback. It's not particularly a good, and this is just more of the same. Right? What is the center of this 2-day range? The center of this 2-day range is the high of the previous range. Is it 91, 8, that's, let's see, 18, 91, 70, about half. Okay, this level has been taken. Again, we're back at the 4400. Something else that you will notice is, well, you got these cycles, right? Remember, we talked a lot about the distribution curve, the diffusion model. Now you got the laggards. I think the rally is in the laggard stage, and that could be, there's a chance here that can be the innovators of the next movement or the next cycle are in. We're getting in. This could be the destination of this trade here. You know? The potential destination is 91.50. You have 6 minutes into the fields. You have the directional move. The next 14, or starting the 14-minute mark, I would like to see some continuation. There can be some retracement here, but the fields, getting back inside previous day range, that's a sign of weakness. But you know that, right? Everybody knows that because the market is going lower. Continuation, we see the market taking overnight halfback. Overnight POC. Yeah. Continuation, we got overnight POC here. Next thing, yesterday's POC. Next thing, the ultimate destination, this level here, this super weak level here. Okay, I would like to see what happened around this mark, in this area here, because there's nothing here below in this area here, if the market has downside continuation, right? Remember, overnight inventory is fairly balanced. It is 8 minutes into on the first period. The opening is, it's a hard time to place a trade. If somebody does a lot of opening trades, or trades the opening, I would like to hear how efficiency is, statistically how they have performed. All right. Market is having done some continuation. Market is trading through the POC. Next thing, yesterday's POC here. Now I want to see where the pullback, where the rally is now technical trading, right? Technical trading here. Let me pull something from here. I want to do something here. All right, I got this thing. All right. Now, if I going to have some, just look at this trend line here. What do I have here? Where this low is 81. Okay, 81. What do I have on 81? 83 is the 50. 81. 80. I mean, this area here. That would be if traders are using the current range. There's a range here, right? We've got this one. You have this one on the lower side, which is the 50, also really close, and the upper side has this trend line as a reference. 20. Not that I trade. You can. I mean, that's not the kind of trade I am. But if you are that, you have to have watched this these references here. 12 minutes. Crude oil is having some rebalancing. All right. Now we are about to get inside the 14 minutes mark. We have a direction. Low volume, very low volume here. Yesterday, we know we have really low volume, right? Really low volume yesterday. If this is the 14-minute mark, kind of like, the expectation is around same as yesterday, So you will see right away. You can see right away we are going to have about the same volume as yesterday, because usually the second half the volume decreases. But what happens in volume increases? No, but there's a weak market here. There's a weak opening. Market opened with a gap, and the gap was closed right away. It's a tiny gap though. Weak opening yesterday, weak opening here, weak closing here. Yesterday also tried to go higher and now it's being rejected right away. If you have any question, please just let me know. Any comments? It would be nice to hear other people's opinions here. Okay, after the 14-minute mark, I will expect some continuation of the movement. In this case, the movement is to the downside, right? I mean, those are little tiny things that you start. Again, I hope you have watched yesterday's webinar, Jim's webinar, because when you start to discover, when you realize what things we need to observe in the market, the next step is how do you trade, right? And that is a very personal discovery, because the way how one trade is different. The way how Peter trade is different than the way that John trade. They all can see the same information, but the way how they trade is different, and it happens to everybody's different. One can be successful with one way of trading, and another one can be successful with the opposite. Something completely. But it all depends on personality. It's all up to us. And that's a very personal. And that's why he said, he cannot teach that. That's self-learning. And that's why I call this thing, right? I am using these 7 minutes periods. No, because if I see a directional move, it usually happens in the first 7. Then the next 14. Starting 14, I should see some continuation, which is the confirmation, which is happening right now, right? You got that? And then you will have some pullback or rally. In this case, will be a rally. And the last 7 is also something very important, because it will show me if there is continuation of the movement or if it starts. 2 out of 3 has happened now. Okay, 2 out of 3. Direction, continuation has happened. Right at those marks, right at those minutes, at the marks that I use. And everybody is different. This is something very personal that I'm sharing here. It doesn't have to work for you the same way. We all are different. We all see the same market in different way. This level has been taken. Next, downside continuation, POC. And this wacko level here that we have here. Absolutely crazy level here. Market has come back inside previous day range. When the market does that, there is some exploration above yesterday's. The potential destination is the opposite side of that range. It did happen yesterday. Okay, see? It explores above. I must check the opposite side. Now, traders do what works until it doesn't work anymore. The same thing is happening now. Okay. Traders get used to one thing really quick. Continuation. The odds are there, right? You have value lower, POC lower, POC moving lower, absolutely crazy weak level here, absolutely crazy weak market. Okay, it doesn't mean it's going to break now. it just tells me that the risk in the long side is unbelievably high. The expectation here is a spike. When the market gets to this level, a spike here to the downside. That spike can take this range out, I mean this area, it could be bought here, which is what I am seeing. I'm just checking what the market does here. Of course we have the 50 right there as well. But the thing is, what happened if what is expected don't happen, or doesn't happen, or whatever. Location here, potential destination or first stage of the trade. Everybody, and sometimes you will find, when you use market generating information, sometimes you will find doing the opposite what most traders are doing. If I see this market, what do you think most traders are doing here? Market is going higher, 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 higher. What traders are doing here? They're buying, right? Buying the dips here. Just be careful, very careful here. The correction. This is something I learned also. Sometimes I got this markets right. I understand, I see the risk, and I just start shorting the market. Right? This market is super weak. This has to break. It has to break. It has to break. And it never did. It just around my stops or squeezed me to the opposite side. And because often markets need a catalytic to do the correction. What is going to be? I don't know. Sometimes it's just, some geopolitical thing. It could be some speech. Remember today you have Chairman Powell again at 2 p.m. I don't know where he is going to speak. I missed him yesterday. He spoke at 9:15 a.m. I didn't know that. And tomorrow we have consumer sentiment at 10 a.m. Alright, POC here, POC is 53. This is the last 7. If I see something here, I should see some continuation in the last 7. Look at the volume. It's going to be about the same. There's a lot of trade around the 4,400. What do we have around the 4,400? What do we have around the 4,400? Okay, this is 4,400. What do you have here? Nothing. There's nothing here around the 4,400. It's just a number. It's just a century. It's a round number. It has two zeros on the right side. And traders get crazy around those things. There's nothing here. There's nothing here. But you can see clearly that the market is doing a lot of things around the 4,400 mark. It did it yesterday and the day before. And that's an indication who is doing the trade. Who is in this market right now. If there was some serious buy here, for example, this is a good opportunity to buy here. If there is something serious, who cares about the 4,400? Big money doesn't know about it. What is the 4,400? Who cares? I just have a position to fill. I have to allocate this amount of billions. And where is the 4,400? Where is the 50? Where is the 5 or 20 moving arms? They just don't know. Right? It is more likely that this is just, it was a short covering rally what we have here. Again, it doesn't mean you cannot go higher. A common way of thinking is, the market is not coming back to this area just to be sold from this area. It can't happen that way. It's not going to do it. It's not going to do that. That's that's the way of thinking. There's how a lot of traders think. If you check this, if you have been in these chat rooms, trading rooms, that's what they think. And because of how the market was moving yesterday, the day before, and the previous days, is also that is just more indications of the same. Okay. And the risk I see here is just crazy high here. Just 3 minutes for the next period. This low is right very close to POC. You got a weak level down here. I'm going to remove this area. I know this could be an area. That's this area I am watching here. I have made a decision here. I'm not going to be long. Of course, the next 5 minutes, I will find myself in the long side. I understand the risk, right? It is one thing you may see an opportunity, but after all, I was checking one of these top step coaches yesterday. At the end, one of the things we do is manage risk. Manage risk is key here. For example, what is the risk here? We're going long, we're going short. Down here. Now you need to find location for the trade as well. I understand the risk is very high. So a good trade is, something very close to this area. Was at the opening, you can be short, you can be long. You choose to be understand risk. You can choose to be long here, right? But as soon as the market takes this level out, or it gets too close to this level, you just close your position, right? I understand that it can come all the way down to here, and you can have downside continuation because the market is super weak. Understanding also there could be any catalytic that's the thing about this kind of markets. If something happens, if something exogenous happens, it can take the market like 10, 20 points to the downside in no time. And if I have stop here, if there is no bid, nobody's going to take the market just can run my stop. You have my stop here, it can be filled down here. That's the risk as well. That's part of the risk. The risk here is high. The market is not so far is having continuation, downside continuation here. If I do a trade in the short side, I will be doing something against the trend. And that trade has to work really fast, right? It worked fast here. Why I say against the trend? Look at what's happening here. higher, 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 higher. If I go short, go ahead and short the market, I'm going against the trend here. Now have another, again, we're getting closer to this level here. You got a 4400 here. Kind of like a risky market here. On both sides. I would expect something. I would love to this. I mean, yeah, seems like they're selling rallies now. If I got a short here, I don't want the market to come to this, too close to this level. You know, this was good. This is good here. 1 tick, 2 ticks closer, that's bad. Continuation, again, continuation, 4400, settle, POC. Next thing, yesterday's POC. And to take yesterday's POC, the market needs to take E low. And by doing that, the market will establish, or would be establishing one time frame lower here. Value is higher. It is very early, yeah, very early in the session, but value is higher relative to yesterday and relative to these 2 days. The first 7 minutes is what I want to see some direction. Volume is slightly, no, it's about the same. There's nothing here. This market has nothing. What are you doing? Are you on the long side? Are you on the short side? Do you have any bias? You can see there is a trade here, right? You can see what trades are doing here, using this level now as a reference. The closer it gets to this level, the riskier it becomes. That's something also that we need to learn in trading is, you know, when we have a winning position, it's really easy to manage. But what happens when you have a losing? You know, the worst thing that we can do, the one can do is add, you know, add to a losing position is the worst thing one can do. I may have a short here, for example. I may have a short here. I may add, right? I may add only if I had that plan. For example, my position is going to be three contracts or 4 contracts. You know, but I decide to, okay, I am the short side or I am the long side, and my position is going to be 3. And the market needs to do this. But I don't do, okay, well, what I don't do is I don't buy or sell the contracts all at once. I might do first one, then watch and keep observing the market, do the other one, and the other one, and the other one. Only if that's my plan, that's when I do that. But if I have a short here and the market, you know, if the market keeps going lower and suddenly just goes against me, and I decide, okay, I'm going to average. You know, I am changing. I don't have a plan there. Well, I don't have a plan. That's very different. You know, the way to think in the process of thinking is completely different than the one in the fields example. Now, this one, we have 4 minutes. Still, if I see continuation here, the first 7 minutes, you know, I've been too exact here, right? In the first 7 minutes, the market should take this low out. Expect some pullback or maybe some spike after that. And the next 14, some continuation. Inside bar. was a nice push the market had here. That was a nice push. Got 5 minutes. This is the area with high volume, right? The market has not removed this volume here. Supply, demand, whatever you call, whatever this kind of traders call this, supply, demand trading, the market. Now, if I see this market coming down to here, they're good. Also, this area can be taken. If these are longs, you know, from yesterday you have 1, 2, 3, 4, 5 periods going higher, they will be forced to liquidate here. And the trade could be the liquidation coming from this level here. And the liquidation happens when this traders are forced out. Okay, this level is forced out, and the spike can take the market to this area here. We have continuation here. First 6 minutes, 7 minutes. We got the continuation here. This level is absolutely weak, very bad level for the longs here. It's crazy high risk here. This may have a spike to the downside, like one, just like the one happened right now, like boom, it can come all the way down to here. Or to here. Alright. Continuation. Market has taken this level now. Next thing, obvious, also very obvious, this level is the one, the next one. Taking this level out is the would be, I think that would be the culmination of this trade here. Alright. Do we have a spike here? Alright. Come down to here. Okay. Now, if I have this, I want to see volume here. Volume coming, right? This volume is being removed and volume coming here, the opposite direction now. What I'm doing is I'm checking some SPY puts. The SPY in 2 weeks. Those were 150. The 43, 40, 30. Those were 150 yearly. Now are almost 190. And the one that expired next week, they were 82, 92, something like that. In the morning now are slightly higher. Okay. This level now has been corrected. This one. Okay. So once this level is taken, it's not good. It has been bought from this level here. Now that this level has, I mean, that was a trade, right? Taking this level out. It's time to hedge. As soon as this market takes this level, it's hedge or trim or take profits or do something here. If there is some downside continuation here, that would be something else, right? That's extra. But just do something here. The market didn't give us spike yet. The potential destination of this is the opposite side of this trade or this range yesterday. This level has been taken. This level has been taken. Now, what is the next thing? If I want to see downside continuation, if I monitor the market, value low, right? Which coincides with 50 moving, with 50 SMA, which is a moving average that short-term traders tend to pay a lot of attention. Right now it's 43.79. Oh, let me correct that. It's not. It's 43.79. Kind of like down here. And that's because these are dynamic values. But I keep this one from when the market open or before the opening. I have this. So I have this number. All right. Next 14 minutes. The 14-minute mark is what we. Usually, in this cycle, in this market, in this contract, or whatever, or call it, or you want to call it, my observations are that if there's continuation, if the market has odds, or good odds of continuation, it usually happens around the 14-minute mark, 14, 15, something like that. We have the directional move in the first 6-7 minutes, continuation in the next 14. Because the market doesn't go in one direction, like straight down or straight higher. There's this positioning, market retraces, there's some pullbacks, some rallies, and then to continue. The tempo has been good at this market so far. Now, compare, I hope you remember how this market traded yesterday when the market took this high out. Also how the market traded when the market made this, get back inside this range, how B, C, D, E were. Also, you have I, J, K, L. The same way how this traded here, the same kind of tempo we have. The tempo we're having now is different. It was nothing like this. Or it is nothing like it was yesterday. Okay, again, 14-minute mark. Let's see what the market does now. I follow or I use. I mean, instead of last today, for example, I could have used POC, yesterday's POC, right? There's a nuance here in this day. It happened, it has to do with the previous day when market got this K here, notice well. I mean, this is just, this is these nuances, we need to pay attention to these nuances as well. This thing here, notice how what K does here. It's not the fact that you have only one TPO here. It's the whole, it's how it happens, right? That I had this one that day, and the next day the market coming back and being bought exactly from that level. It just means something. All right, that's a nuance, all right? Not for this day, but you just keep carrying. You just keep carrying this information, because the resolution of this kind of trading doesn't happen. It not necessarily have to happen right away. There's always, as Jim says, there's always a lag within what is happening and what's going to happen, what is bound to happen. We need to be aware. I used to be so so anxious. For example, they say, okay, I have to be sure. I saw this. This is not good. And just wait. Watch the market. And the first time when I started noticing, first is I learned, or Jim teaches this. The next thing is as soon as the market opens, I forgot about this, right? If after 2-3 days, I have no idea, no memories of this thing, until I realized maybe 2-3 days after, oh boy, there was something there. When I review my notes, But the more you do, the more used you get to this. When you start to retain information, it is there for you to use down the road. Now I can see, for example, now we have 17 minutes into the second period. We have the first thing I saw here. We have continuation, but now a directional movement, the first 7, right? Now I have the 14. It did not have continuation. This happens in the first 7. It's not having here. Now the next thing I want to watch is the last 7. Well, when the market opens the next period, and this is because I use another thing. So it's also I don't use 1 minute to 5 minute charts. This is what I do for trading. This is what I have for trading, and these things as well, But I am more focused. I try to be more focused on this thing. When the market is moving too slow or too fast, when market is on streams, I start paying attention to these levels here. Now this is yesterday, for example. This is accumulated yesterday. This is accumulated today. Now this volume areas, or you can call it supply, has been taken out, right? Now, if there is something to the downside, I will see volume being accumulated down here, or moving lower. Because that's the way how that type of trading works, or they do. Not that I trade off for that, but it has been quite obvious that there's a lot of technical trading going on here. All right, it is 10:20. I hope you guys are having a good day. I wish you a good rest of the day. Stay safe. Unless you have any questions or comments, we'll see you another day. Hope I can be here tomorrow as well. See you. Have a wonderful rest of the day. Bye bye.